So David Reyes does a show on Sundays here, 760 KFMB, and we're going to check in with him because he's a guy who actually knows about these markets and knows what's going on. And I can tell you all the political stuff that I think the implications are for what's going on, what the underpinnings are. But he's actually somebody who's an expert, and he's going to jump in here in just a few minutes and share with us what it is that's happening here. Because otherwise, I'm a guy who would be like a panicky guy. I'm a guy who would be like yelling sell and jump out the window. Okay, I have a steadier hand than that. I understand it more than that. But I want to bring in the man himself, Mr. David Reyes, who joins us now on the guest line. I know you're super busy on a day like this, David, right? I mean, this has got to just make you want to go nuts seeing what's happening in the market today.
Yeah, a little bit. It's fortunately the way we manage our clients' money. They're not too concerned, but I'm more concerned about your listeners because these kind of days kind of make you. It's a wake up call.
Yeah, I mean, I'm jumping between CNBC and Fox Business and Bloomberg,
Yep.
and I'm reading the internet, and they're saying this all stems from basically one of the members of the Fed who says he's going to give a speech. Lael Brainard's going to give a speech in Chicago on Monday, and everybody freaked out. I know Trump said a couple of days ago, this is a bubble economy. The Fed is driving all of this. Some people kind of gave him a hard time over it. What do you say, David?
I totally agree. I mean, it's been like this for a while. I mean, you have the second highest valuations of the stock market in history. You've got interest rates that have hit historic lows since the 1950s. So unfortunately, Brett, we're in both a stock and bond bubble. And to give you an example of that, I mean, the Dow lost almost 400 points today, right?
Right.
And bonds, long-term bonds, were down almost 2%. Now, why is that a problem? Because typically, when you own a balanced traditional portfolio of stock and bonds, when stocks go down, what's supposed to happen to bonds?
Go up.
That's right. So what happened today?
They both went
Stocks and bonds went down. So how much protection did you have? How much risk management was there to limit that downside? None.
None.
And that's been my fear, Brent, for a long time, is that because you have historically when stocks are all-time highs, bonds are low. What you're having right now for the first time in history is stock prices are high and so are bonds. So what that means, Brett, there's no place to hide because everything can go down. Like today, gold was down, silver was down, the U.S. stock market was down in every sector, and then, of course, bonds. So, everything falls when you have everything that's richly priced. So it's a big problem.
And you've got these people who I think feel like they can still chase the top of the market, right? They can day trade or they could do certain things, and they could chase the top, and they could still get the top of that market. And I think the average person lacks the fundamental understanding of how this stuff all sort of works in tandem with each other, right?
Absolutely. I mean, the biggest fallacy is what we just talked about bonds. I mean, Warren Buffett says it best: is bonds should come with a warning label. And what he means by that is people, are all think it's their wubby, right? They're gonna be all safe and happy with this safe bond, and people don't realize at the depressed interest rates we're at, if rates rise, for every 1% rise in interest rates, Brett, on a 10-year bond, your bond value goes down 8%.
Wow.
So a 2% rise, you could theoretically lose in a long-term bond portfolio 15, 16%. People don't realize the risk in bonds right now. It's a real problem.
So I guess what it comes down to is people also have I guess they're putting too much trust in these super smart people allegedly in government and super smart people on the television channels, and they're figuring, okay, I'll just figure it out by navigating this. There are nuances here, like you just said. When you have a certain kind of a move, it affects your portfolio this way, and I think the tough thing here, and correct me if I'm wrong, is the ability to pull the emotion out of it, right? Because people look at this today, they get emotional. Like I know a lot of people who are retirees who are looking at this and they are scared, and they're like, "Oh my God, we're going to lose our retirement. We're absolutely going to get wiped out. What am I going to do?" And it's shades of 2008, 2009 all over again. How do you pull the emotion out of it, David?
Well, it's difficult. I mean, quite honestly, the biggest, you've heard me say this before, giving permission. I mean, part of what we do as a firm and how you help clients is you got to be their handholder. And more than that, you have to have a plan to deal with this type of stuff. So if you're not on top of what's happening in the bond sector and you have a traditional balanced portfolio is, quote, safe, right? Half stock, half bonds. You're scratching your head today and saying, oh, my gosh, what happened? My whole portfolio went down. I thought bonds were safe.
Right.
That's a perfect example of the average person's not going to be able to wrap their head around that. And so, my advice to them is always seek help, seek guidance, hopefully have an advisor. If not, probably get one that you can trust, because it's during times like this that you need to keep people from walking off the ledge. And even more important, do you have a plan to deal with this type of volatility, especially in a market that's not going to behave like it's behaved in the past? So people are going to get hurt. There's no question.
And we're visiting with David Reyes from Reyes Financial Architecture. And you can listen to his show right here on 760 KFMB Sundays from 9 to 10 a.m. And I have a special offer coming up here in a few minutes. Let me ask you one final question on the way out the door. And I want to get your reaction to this because we haven't talked in a couple of days. Mark Cuban earlier this week says, and I'll give you a 45 to a minute to answer on this one. Mark Cuban says, "Oh, the minute Trump gets elected, this whole thing's going to grenade. It's over. People are going to run to the exits." What about the political implications for people's nest eggs and retirements?
Well, that's a big one, and I'll answer it this way, Brett. We have what's called election cycles, presidential cycles. And historically, we've had two-term presidents like we have right now. Mm-hmm. Obama's a two-term. Clinton was a two-term in 2000. What happened in 2000? Stock market crash.
Yep.
Two-term President Bush, 2008. What happened?
Crash.
Stock market crash. Now we're all-time highs again. Two-term president, 2016. All right, I'm not saying the stock market's going to crash, but I'm telling you, you're in the worst month of the year, is September. Mm-hmm. You have a presidential election cycle. You have the Federal Reserve talking about raising rates. You got, North Korea now maybe went off a nuclear weapon, right? And then you've got, all this other stuff in Europe and Japan, and it's just not, it's not a market that you want to mess around with as far as not being prepared for this kind of stuff. And unfortunately, the people that I sit down with every day, and our listeners, your listeners, they're just not adequately protected, and they don't realize how much risk they have. So, with what Cuban's saying, I would say it's not so much a Trump issue. I think it's much more of a economic cycle issue. Mm-hmm. But yes, Trump is to wrap this up. Clinton's a known. Yep. On Obama third term, right?
Right.
And so that's actually better than the short term for the market. I mean, real short term. Like election time.
Sure.
Trump is more of a wild card. He will produce in the short term as he gets more and more, closer in the polls, like I know he has been through what you've taught me. Is that will in the short term that will cause some angst in the market. So for all those reasons, you just better know what you're doing because it's not a time to be bold and to be brave right now.
Great stuff, man. I really appreciate you. I know how busy a day like today is for you. Appreciate you making time for us, and everybody's going to be tuning in on Sunday from 9 to 10 a.m. With David Reyes Financial Architecture. Thanks so much, man. We really appreciate you coming on today.
Thanks, Brett. Appreciate it.
Likewise. That's David Reyes Financial Architecture. Now, listen, you like what you just heard. I like what I just heard because I was nervous going into this. The financial end of it makes me nervous. The other side of it, the politics, I understand. But I'm not one of the wizards of smart on Wall Street, and I'm not a hedge fund guy, and so I don't see the different sort of undercurrents that are involved here. And the fact of the matter is, there's a lot of misinformation and confusion about stuff like this. One of the aspects you hear about all the time on TV and radio and things like that, annuities, right? Well, David Reyes, a guy you just heard with me talking about what happened today with the market, he and I are going to be doing a special upcoming workshop. So I want you to join me and David Reyes at Reyes Financial Architecture for this upcoming event called Annuities, the Good, the Bad, and the Ugly. At the workshop, you can find out and will find out how to avoid the high cost of annuities, how to buy an annuity with zero fees, how to protect your principal today against market losses. Boy, wouldn't that be helpful? Create lifetime income that also increases with inflation, how to participate in stock market returns while protecting your principal. And finally, is an annuity a good option for your retirement income plan? This workshop coming up Wednesday, September 21st at 6:30 p.m. Wednesday, September 21st, 6:30 p.m. But you have to have a ticket to come to this. David and I are going to be hosting this. We're going to be having a great time, and we want you there. We've got seats, but they're filling up quick. Get your tickets to the event now. Call 800-611-1967. 800-611-1967. 800-611-1967. David Reyes is the founder of Reyes Financial Architecture. He's got over 20 years of experience in this. He's the co-author of Successonomics and the host of The Retirement Architect right here on KFMB every Sunday from 9 to 10 a.m. He's also a guy who's going to look out for your best interests. He doesn't work for the big brokerages. Call for your tickets. They're filling up. 800-611-1967. See you there. I'm Brett Winterble, AM 760 Talk and Breaking News.